Up next, it's our chance to do a deep dive of what's happening in the grain markets. And joining us this week is Mike Zuzulo, the president of Global Commodity Analytics. Mike, we appreciate you coming back to Market Journal. It's kind of like deja vu around here. We compare this August to last August. A lot of similarities, and it has to do with wheat. Tell me more.
Yeah, not a good sense of deja vu. Thanks for having me back, Bryce. The wheat market feels a lot like the end of July, early August of last year. And I quite frankly was expecting kind of a demand low in the wheat market to show up before we got to the August supply demand report and maybe come in and help support the expectations of this great big yield jump that the trade is dialing in, I think, at this point when it comes to the corn, especially with the stocks worldwide down 7.5% versus last year at this about this exact same time. It would make sense given that the harvest is wrapping up, given the fact the dollar's about 5% lower than where it was a year ago. We'd start to see some pushback by the longs here and start to see a little bit more short covering. We've seen the exact opposite. The trade, I think, is still caught up in the tariffs, still caught up in the Black Sea mindset. And as a result of that, I think they're really looking at the U.S. ending stocks, expecting demand, export demand specifically, to really start to give way as we get into the fourth quarter.
Mike, you brought up tariffs. Let's dive a little bit deeper into that discussion. President Donald Trump had set an August 1st deadline with countries to make a deal with him. We didn't see a couple of key countries make a deal, and because of that, the tariff discussion continues now. What's the latest? What should we care about that impacts kind of the three main grain markets?
Well, oftentimes, sticking with the wheat narrative, Bryce, we see the crude oil market tend to drive the wheat market and can drive the whole grain complex. I could see that happening again as we get into 2026, because to answer your question, what happened this week was India, instead of becoming a possible trade deal and taking a good chunk of agriculture exports, and in fact, maybe being the best replacement for China if we never got a trade deal with China, actually went on the defensive with us because of their purchasing of Russian oil. About 1.5 million barrels a day is what they're buying from Russia. President Trump, like he's done several times, has come in and said, I'm going to use my tariff policy as my foreign policy, and I'm going to tack another 25% on top of your goods. And so we're at a 50% tariff now with India, and they are deciding what to do at this point. So I think the trade took that very poorly again, because we need more ag export type of details in terms of trade deals, whether it's South Korea, whether it's Japan, or now whether it was going to be India.
I know we're tying the wheat market to the corn market a little bit. I wanted to zero in on corn for a second. As you and I are visiting on Wednesday, December corn briefly traded below what's being called a psychological level, which is $4. Traded below that. I think we closed above it or right at it here on a Wednesday afternoon, Mike. Is the low prices, or I should say the price we're seeing at the moment when it comes to corn, how much of that is because of the yields that are being tossed out and projected right now versus the demand and kind of the relationship between the two of them?
Yeah, I would split it pretty much down the middle, 50-50 at this point, Bryce, because I think the wheat has that much power in the corn. The corn market being at a 375 lead month futures price as of Wednesday's close gets you almost to that 360 low we made last August. And so at 375, my price model would suggest we're dialing in about a 2.3 billion bushel carryover. The interesting thing about this, though, is that we're only about, 15, 20 cents away from the lows from last August. And yet on a worldwide basis, we've got the tightest supplies since 2013. We're down about 13% from where we were last year in the previous marketing year, heading into that August report and world corn ending stocks. So again, it would match up to me. Why would the beans be finding support, corn and wheat not? It's about U.S. stocks, not the world stocks right now, to the funds.
Okay. And how about on the soybean side of things? A phrase that's often thrown out there in times like now is that low prices cure low prices, as in you make the commodity cheap enough and someone will buy it. How low do soybeans have to go before we see a boost in demand?
Well, the question would be, can the wheat and the corn come in and support the beans? Because that's where we're at in terms of 960-ish on the lead month beans. We really need to see the corn and wheat come in because of all three of the commodities. Yes, we could gain more biodiesel demand domestically, but I'd look for us to keep losing export demand from China, especially. So if the corn and wheat can't bottom, then another 60 cents downside would not shock me.
All right, coming up next week, it is the USDA latest WASD report. How big of deal is that for the market? Going to be watching that on Tuesday.
Wouldn't have been a big deal had we not gotten into this deja vu mindset, Bryce. It's a big deal now. It could carry us all the way into September, October.